This episode is supported by the American Resource Center, or the ARC. ARC is the first American space of its kind in Europe, and it exists for one reason: to connect Serbian talent with American opportunity. Whether you're 15 or 35, building in tech, entrepreneurship, AI, or creative industries, ARC gives you direct access to programs, mentorship, and networks that used to require a plane ticket to Silicon Valley. It's not just a space, it's a bridge, and all programs are free, and you can find them at Ložionica in Belgrade, and you can start building your path beyond borders.
If you're a startup founder from the Balkans, you'll eventually need a US company to sell into the US market, use Stripe, or raise VC money. But here's the problem. US lawyers charge between $600 and $1,000 an hour. Opening a bank account as a non-resident is a nightmare. You need a US phone number, operating address, and there are a lot of hidden costs plus lawyer lingo you can't understand. This is why we have partnered with Neobase. They are a team of Balkan founders who have been exactly where you are. They're 10 times cheaper than US lawyers, and they handle everything end to end, from the corporation, bank account setup, tax filings, and basically leaving you to focus on your own business. Head to neobase.co, book a free consultation, and mention Scale SE to get 10% discount off your LLC or C Corp setup.
Hey guys, today's guest is David Schoch. In the last 30 years, he has worked across multiple industries in telco, private equity, venture capital, scale-ups, and global corporates in the United States, UK, and Western Balkans. He is a partner at StartLabs Ventures, former president of the Serbian Private Equity Association, co-founder and former chairman of Orion Telekom, and a senior operator who held roles at companies like HTEC, VICERT, and Quantox. He has raised institutional capital, executed acquisitions, scaled companies internationally, and played a major role in shaping Serbia's both investment and innovation ecosystem through Serbia's national accelerator program called Katapult, which is supported by the World Bank. David, thank you for coming on the show.
Pleasure. Thanks for having me.
All right, I want to start off with early days. Like, what was it like growing up in the U.S.? You were born and raised in the U.S. Just give us a quick background on who you are.
Sure. So I was actually born in Germany. I was born in Frankfurt on the U.S. military base. My father was in the service, so was for a brief period an Army brat. But then at the age of 1, we went to the U.S., moved back to America. My father had been in the war in Vietnam. He spent a year after his tour in Germany, and then we went back to America. I'm from the Midwest, small town, middle of the country, what they call the flyover states. So didn't come from New York or San Francisco, didn't grow up in a metropolis outside of Detroit in a smaller city. Very typical childhood, like you see on the films. You know, went to the big high school and played sports, and there were cheerleaders and pep rallies, and very much had that typical experience. Got a good education, but in a small town in the middle of the country. Took me a while to kind of figure out what I was good at, what I could do. Kind of felt I was just an average guy for a long time, and then realized, hey, there's some things I can do, and there's some places I can compete. And then, as I got kind of end of high school and then into college, started realizing there's some areas where I can get in the game and start to develop.
Cool. When you finished college, what was like your first job out of university, and kind of how did you get into the telco industry?
So in 1993, graduated from college, got a job offer from a tech company that was selling Hewlett-Packard computer systems, based out of Dallas, very entrepreneurial. And they were selling HP computer systems to the corporate market. So took the sales job, got into the corporate space, got into tech, and they sent me to the East Coast. And I had a territory that went from, I think, New York down to DC, down to Washington. And I was selling, basically calling on big enterprise corporate clients, selling HP systems. And that was my first kind of delve into, I studied management information systems a bit in college. So I'd always had a kind of a lean towards tech, but I'm not an engineer, don't have a strong tech background. Got into tech sales, and that was kind of how I launched from my early days out of college. Did that for a year, and then got the opportunity to work for an investment boutique in Prague when Prague was really blowing up. This was late 93, 94. And I moved in the fall of 94 to Prague to work for this investment boutique. And they had a project that was in telecommunications, and I started that.
And how did you go from Prague to London, and like what what did that job look like
So-
at the investment firm?
Spent 2 years working for the investment boutique. They were investing in a broad range of things. They invested in some entrepreneurs that had built clubs and bars around the city. That market was booming. So I ended up running four bars and clubs at one point. They had signed a deal with the telecoms company Sprint to represent some of Sprint's products in Czech Republic and Slovakia. So I built a marketing plan for that, started marketing the services, built up that revenue line, and then discovered there was a company that was backed by American capital that was building telecoms networks in Central Europe, Czech, Hungary, Slovak. They eventually expanded to Poland, and they were active in Russia as well. They had gotten there early in the 90s, but American capital. And I think originally Soros had invested in the group way back when. And they offered me a job after I spent 2 years in Prague, building up kind of their corporate sales for their data services. And that launched my career in telco.
So then you moved to London. What was that like? I mean, you were in the US, and you moved to Czech Republic, then you're moving to London.
So I spent 7 years in the Czech Republic, and the company that I ended up working for in telecommunications, the CEO, very senior guy in telecoms in the UK. He had been CEO of Cable and Wireless Communications, Mercury Communications, which became Cable and Wireless in the UK. Was CEO, I think, of Equant as well, or maybe COO. Duncan Lewis, really sharp guy. He became CEO of the company I worked for, which is called GTS. They moved the headquarters to London, made him CEO. He came to Prague to Czech to look at the business that I had helped build up. At that point, I was responsible country manager for Czech Republic and Slovakia, which is about half of our Central European business. And we'd taken that from a couple $1 million a year in revenue to like 55. And he came to visit to see kind of what we're doing, what's going on there. And within a couple of weeks, recruited me to work in his management team in London. So after 7 years in Prague, of which I think 5 I'd spent working for GTS, he recruited me to move over, and I moved to London to be in his senior management team.
And how long were you in that company? What was the...
So I did 5 years in Czech Republic and GTS, and then I did another, so they moved in 2001. I worked at GTS, I think, for another 1 or 2 years in London. And then I moved, the dot-com bubble burst, all the big tech companies were having problems, primarily with their balance sheets, and I moved to Cable and Wireless, which is where Duncan had been CEO previously. Through his recommendation, I ended up getting a job offer at Cable and Wireless, and joined kind of in strategy and business development in the corporate sector, primarily for the financial services sector in Cable and Wireless. Did that for another probably 4 years, I would guess. And so kind of built up a telecoms career in the UK.
So where does Serbia and Southeast Europe pop into your mind, and like what's the story there?
So I spent 7 years in Prague, 5 years building up a telecoms group. We took a company I helped take an entity with a couple of other guys in the team. We had about 35 people in the company in Czech Republic. We ended up building that up into probably, I don't know, 250, 300 people and 55 million in revenue. And I saw the opportunity in telecoms and emerging markets. Like, this is an amazing opportunity. Now, when I moved to UK, we were growing 7-8% a year. It was very developed. It was developed, mature business. In emerging markets, we were, growing 50-60% a year, which is super exciting. And I realized in the UK, I prefer emerging markets. It's better suited, I think, to my skill set and my interest than working in developed markets. So I kind of came to an inflection point. Do I go back to the US after I was leaving Cable and Wireless around 2006? Do I go, okay, it's been my plan was to spend 2 years in Europe. Obviously, I'd spent, at that point, I'd been there, I don't know, 13 years.
13 years, okay.
And then I said, do I go back to the US? I'd also gone to business school in the process and got my MBA doing the international program at the University of Chicago. So I kind of felt like, okay, do I go back and just do the corporate thing in the US, or do I try something entrepreneurial? And I really felt like at that point I was 35, 36 years old, put a little money aside for my career. I wasn't married, no kids, and thought I want to try something entrepreneurial, but a lot of that stuff had been played out in Central Europe. And I felt like the new frontier for EU expansion and for investment was going to be Southeastern Europe. And I got to know a lot of friends when I lived in Prague that in the 90s moved to Prague that were from Serbia, Croatia, from the different countries of former Yugoslavia. And I thought this would be a great opportunity to come and do something in the region, in the Balkans.
So how did it look like? Did you just book a plane ticket, come here and start Orion Telekom, or like what's the story there?
Close. I had a partner that I was working with in London that had a small kind of consulting innovation consulting business focused around kind of venturing, working with corporates and venturing. And I talked to him and said, why don't we try and do something in Southeastern Europe? Booked a plane, came over, called some of my friends. They set up meetings for me, went and talked to politicians and bankers and spent a week running around and said, there's clearly an opportunity for consolidation in the internet and telecom sector. Let's try and build, a fixed line competitor to Telekom Serbia over time by getting in there early. And I built a strategy, and then I built a financial model, and I created an investment presentation, then started talking to investors, hedge fund. We got involved, a UK-based hedge fund. We got EBRD, the European Bank for Construction Development, in the game. And then we started buying companies, basically, individual internet service providers in Serbia, and consolidating them into what eventually became Orion. It was, then it didn't become Orion until several years into the deal. We changed the name as we were doing the consolidation, but it was always a consolidation play in the Western Balkans.
So you basically had some spreadsheets and a presentation. How much money were you able to raise, and how does that look like when you're a foreigner? You come to a completely foreign country, and you set up basically the second biggest telco operator in the country.
It was crazy. It was early days. I got here. I started coming in 2006. I think I'd been here before, but I started coming for business in 2006. Started on the telecoms thing in earnest in 2007, and said, let's figure out what's the strategy, what are the opportunities. Deep analysis, did a really deep analysis of the market, looked at all the different telco players, talked to as many as they would talk to me. Obviously, business practices were very different back then. And then started compiling data, and then going to investors saying, here's what this market looks like. You've got a massive monopoly. You've got a couple of mobile phone networks, one big cable player, then lots of consolidation cable, and lots of consolidation in the ISP space, in the internet service provider space. So it said, here's what we think we could do. Here's what we think value. And I was showing them, here's the company, here's subscribers, here's revenue, here's EBITDA, here's multiples, here's valuations. So I gave them a lot of on-the-ground info that nobody had seen before, saying here's, of all the companies in the market, I think I could probably buy this one, and this one. And then they said, okay, let's try and work together. Well, let's come back and show us some more. Then I started bringing them, here's a term sheet. These guys would sell at this price. Here's a document that shows the rough outlines of the terms of a deal. And it just kind of, we got the EBRD involved. We started signing non-binding term sheets for deals. We got the hedge fund involved because they wanted to do deals in emerging markets. And they were interested in being partnering with somebody like the EBRD in emerging market investing, and it just kind of one after the other ratcheted our way up, and then we ended up raising 24 million euros, literally with a PowerPoint presentation and an Excel financial model.
That's amazing. I mean, that's basically an entrepreneurial journey, which looks very much like a search fund in a way.
Kind of, yeah. It wasn't, because search funds get funded.
Yes.
It was a self-funded search fund, basically.
So for somebody who maybe want to build a search fund in today's market in like the region, what would your advice be?
I think it's tough to raise a search fund in this region, because you need to have, for a search fund to work, and I've talked to people that have done this, you have to have a clear team that's got lots of capability. I had a background there, but we didn't really have anybody. We had a chief operating officer that was ostensibly involved, but we didn't have a full-blown management team. And you have to have a part of the world where you have lots of deal flow and lots of liquidity. That's tough to do here. So to do a search fund in this region, eventually it'll happen, but I think it's still early days for somebody to say, because what I find is when you're raising money in this region, you start with a huge list of investors. You got this massive pipeline, and then when you get to your sector, the stage in which your deals are in, as well as geography, that pipeline goes from like this to this. And there's only a handful of legitimate investors. And generally, search funds can be like high net worth. It's not really an institutional play. So you got to find people that have interest in the region, that have interest in your sector, interest in the stage of deals you're looking at. Like the list is short. So my advice is, I still think it's early days, but I would love to see somebody do it.
Cool, amazing. While you were doing that, it took you a couple of years, but it was also very interesting times in the world. It was like the start of the 2007-2008 financial crisis in the US, which tumbled onto Europe and the rest of the world. How did you do it? I mean, how did you, and how were you for example, financing, how were you financing yourself before you got that deal put together? Because one of the biggest challenges that founders face today, especially here in the Balkans, as you know, is they're trying to raise a startup. They don't have enough capital to live, so they always have like a part-time or a full-time job on the side that they're doing, right? And they're also running their startup. How did you do it, and what would be your advice to founders who are just starting their startup at the moment?
I had to fund it myself. I had a partner that I was working with, and he was providing some of the funding, and I was providing the rest. And I was covering, most of my own costs. And then was, I had to move here, I move all my things here, get a place, get an office, we spent some, and then 2 years with no income. It was very tough. I had a unique opportunity. I had left Cable and Wireless when I was in the corporate game. They kept restructuring every 6-9 months. There would be a new restructure, and I kept getting, every time there was a restructure, I kept getting a bigger job. But it wasn't really what they originally hired me to do, and they just kept changing and changing. So in the end, around the end of 2006, I said, "Listen, you keep changing my role here, and my job now looks nothing like what you hired me to do originally. And this is like the third or fourth time we've done a restructuring." I basically convinced them and pushed them to say, "Make me redundant." So I took the UK corporate redundancy package, which gave me a nest egg of, okay, I can do some stuff for a couple of years and not have to worry. So that helped. But it was tough. I remember it was, I think, probably October 30th, maybe even 31st, could have even been Halloween. I was with my girlfriend/fiance, now wife. We were driving to Prague to see her parents for something. And I got a phone call from the lawyer that was working on the deal to say that I think Lehman's had failed or Bear Stearns. I forget, something had failed. One of those banks had failed that day. And hedge fund was almost certainly pulling out, and the deal was dead. Because they had a bunch of positions with, I think it was with Bear Stearns or Lehman's. And they weren't doing any more deals. We were the last private, they were a fixed income based fund. So they invested in fixed income bonds, but for a very small percentage of their portfolio, they would create bonds that would invest in private equity stuff, but in the form of convertible debt. Okay. And we were the last private equity style deal they did, was what became Orion. But it was the last deal that they did, and after that they stopped because of the crisis. So the short answer is I did this deal by the skin of my teeth. And it's, there was a lot of fake it till you make it, a lot of selling, a lot of pushing, a lot of objections to overcome. But in the end, we managed to get the deal done. As you see now, it's one of the biggest telcos in the country. And all of my kind of premises that I had of what I thought was going to happen to kind of my assumptions turned out to be pretty good. So that as an overall project, it was legit.
So what would be then your advice to the startups who are just starting out?
So this wasn't really a startup. It was from day one a scale up.
Yeah.
We want to go deploy a bunch of capital. We're going to buy a bunch of companies. It was a consolidation play. I like those. I don't think I'm great at startups. 2-3 guys in a room. Let's figure this out. I don't think that's my strength, and it's one of the reasons why I haven't done a lot of that. I'm good when you've got 5, 10, 20 people and you're trying to scale it. That's where I feel like I'm far more effective. But I think for people trying to start something, you do have to fake it till you make it. You've got to have, the good thing about this region is people are very determined. In the startup game, I think one of the generally people complain in this region about ENUT, but in the startup game, I think ENUT is very powerful.
How would you define ENUT?
It's not a good word in English. We would say spite, but I don't think spite is the right word. It's a level of determination to a fault, to the point that you just refuse to give up. And you're willing to, and there is an element of it's determination with an element of spite, but there's a positive aspect in that investors want to invest in a startup where somebody is simply not going to walk away and then go take a job for Microsoft, right? You're a super talented guy, you're very capable, you can get a job anywhere, you could work for Databricks or Microsoft or one of these companies, but you're doing your own startup. That investor wants you to gut it out and not just spend 6 months or 12 months. Well, it didn't really work out, now I go take the job. They want you to spend several years killing yourself. And that's that level of determination and that level of appetite for risk that people in this region have. That's quite powerful. So I think for startup people here, they need to leverage that. They need to leverage on those characteristics basically, and show that they're willing to go all in. And that's what I did. Then when I moved from London, I gave up my apartment, moved to Belgrade. Things started moving, both on the Serbian side with people I was negotiating with, and with investors. Like, this guy's not fooling around. He's in either way. Whether it works or not, we're still not sure, but he's clearly all in. He's rented a house. He gave up his place in London. He's living in Belgrade. I basically, as the refer to Cortez, the explorer, I burned the boats.
You
and
burned
then
the boats,
and I showed that I was all in.
Okay, so that's what entrepreneurs today from Serbia and from the region need to do. They need to burn the boats. There's the boats.
And there's the boats.
There's the boats. They need to burn the boats and go all in, and maybe before that, get a bit of capital behind them so that they can say, okay, for the next 12 to 16 months, I have this amount saved so that I can live, and I'm not going to work for another company.
I think a little bit of capital and a little bit of traction. Investors here really like to see, well, investors in general, but I think in particular here, they want to see some traction. I think it's really hard to convince somebody to fund an idea in the Balkans. People are like, there's lots of ideas in Silicon Valley. Okay, this could work. We know the team, but that's easier for a pre-seed investor to make that bet in London or San Francisco or even Berlin. I think it's harder to do here, but if you show I've got a little bit of money and I've got some traction, things are happening, there's signs of success, I think that's where the game is. And I think a lot of the guys here I see that I've worked with, they've got a good idea, but they think they're going to go sell an idea. I think it's very hard to sell an idea from here, unless you're an amazing, unless you're an off the charts team, but not many people can put that together.
Okay. So you talked about the good things that founders here have, which is the innout with the grit and stuff like that. What are the bad things that are kind of holding us back? And why do we not have more unicorns or more successful startups here?
You know, I've been said for a very long time, Serbia needs to have its Skype, right? When Skype launched, it's probably before your time, but when Skype launched out of Estonia, it was a revolution in like, man, this stuff can come from anywhere. It doesn't have to be Silicon Valley. It doesn't have to be, New York or LA or London. And everyone went, holy cow, this small little Baltic country has produced this billion, and the thing was sold for billions, then it was sold again for billions, and I don't know how many times it got sold, 2, 3, several times, but it was revolutionary at the time when it came out with what they did. And Serbia has needed its Skype, and that was supposed to be Nordeos, then it was supposed to be HTEC. Now the first unicorn I think was technically Drenbio in biotech, but not necessarily in tech in general, but more on the sciences side. Serbia needs to have its tech unicorn, and it still hasn't happened yet, but it will. I believe that somewhere, at least in the region, they'll figure something out here, somewhere in the Western Balkans, and get something out of Serbia or one of the countries that are, I would say, is highly connected to Serbia. The challenge here is part of its mentality, right? So we talked about how that can be a positive thing, that determination. I think also, necessity is the mother of invention. People from this part of the world have always figured out how to do more with less. It's part of the history here. It's also part of the character. It's a great aspect of the culture in this region. People just figure it out. Some bad stuff happens and people just keep going. And that determination and that the ability to kind of innovate and figure it out, that's a benefit. The flip side is, sometimes there's a wholesome mentality. So you and I are negotiating. If you view my gain as your loss every time, it gets really hard for us to do business, particularly if the nature of our relationship isn't a one-time transaction, but ongoing. If it's always wholesome mentality, if my gain is your loss and vice versa, we're gonna have a hard time. And the idea is let's build a bigger pie and we both benefit. But the mentality very often I see with business people in general and startup founders is wholesome mentality. I can't stand to see that guy benefit, because I see that as me losing something. And that's the thing that the region's got to get over, and there's still too much of that. That's one of the challenges. Also, I think in the U.S. we are trained, and it's ingrained in us to sell ourselves first, sell our product, what we believe, our ideas. It's just part of our culture, and you've seen that probably from your time in the U.S. It's just a different approach, and we have that sales approach ingrained in us. Here you have there's a natural hustle to people in the region, which I love. That was one of when I was deciding to kind of settle down here, raise my kids in the region, I really wanted for them to get those multiple educations, good math, good science that they get in Serbia, as well as that kind of hustler's mentality working it. So you have a commercial mentality here of selling, trading, but it's more of a trader's mentality than selling. And that the startups here struggle with go-to-market. They struggle with building partnerships. They struggle with picking the right markets. What's you're going to test this thing in Serbia. What's your logical next market? Well, where's the biggest market? That's naturally where they want to go. Well, think about where you have the advantages. Think about where you can execute. So the go-to-market game in general, I think, is tough here. And you need, for startups, they need to find partners that can help them bridge those gaps. And there's some investors that are trying to do that, are trying to help bridge the gap to those markets and help people with good ideas, good tech, really good startup founders, help them bridge that into whether it's North America or Western Europe.
Mm-hmm. Talk to me about your time at HTEC. HTEC at one point was growing 100% year over year. It's a really amazing company from here that you were a part of. Yeah, can you tell us a bit more about your role there?
Yeah, it was an amazing time. We were doubling the business every year for 3 years. When I joined, I think we were south of 500 people. We were just finishing an acquisition that brought in a couple hundred people that was going to take us to close to 500. We took that to 2,300, within the next 2 or 3 years. So the growth was incredible. When I joined, we had Niš, Belgrade, Novi Sad, and Banja Luka. So we had 4 offices, basically. We ended up expanding to 8 countries, 20 cities over the course of just 2 years. And we took the hiring rate from 20 people per month to 100. So it was drinking out of a fire hose for 3 years, basically, and it was a really unique experience. I got to learn a lot, work with some really talented people, work with a premier company. So it was a very positive experience, but it was also very challenging. A lot of time on a plane, a lot of travel. We were making all kinds of mistakes because at that speed of growth, at that rate of growth, it's impossible to get it right. You can't go from 20 people a month to 100 and not make a plethora of mistakes that you have to come back and fix. And that was difficult. And also it was challenging that, my experience is more rooted in working in the corporate sector. That was a very entrepreneurial business. Mm-hmm. And I had a way of, let's do this the right way the first time. Here's how we do it. And that probably in some cases slowed us down. And then I think in other cases where I was really running hard, I was able to get it done, but then there was a lot of stuff to get fixed. So great experience. It's, I think, a really important employer for this region. It was an important story. And their story's not done. They're still growing, and there's going to be I expect a significant exit down the road there.
Mm-hmm. What were the operational disciplines that separated HTEC from some other companies that when they start scaling, they break? What were the key things that were
So the first thing was HTEC always had a can-do attitude. So whatever it is, we will figure it out. We will get everybody in a room and solve it. And if that means working all night. So there was a no-fail mentality, which is a hard thing to do, to mm-hmm. build across a company of hundreds and eventually thousands of people. That's a tough thing to do. So that's not necessarily an operational discipline, but that was a key characteristic of that company. Second was they were, from an operational perspective, they were outstanding at hiring top-tier engineers. We had an offer acceptance rate north of 80%. So when we wanted when we knew who we wanted, and we generally were able to identify who we wanted, we could get them. So the company was really good at hiring top-tier engineers and also really good at delivering digital products. So in the era when there was a ton of money in the market, both through quantitative easing and then COVID, there was just all of this capital that was going into the market. As a result, that fueled a huge amount of digital development across corporate, startup scene, across the board. Everybody was diving in. So absolutely in the right place at the right time and with the right capability of being able to hire the best people and scale those people and deliver digital products. Now there's a bunch of other areas you need that where HTEC was still learning and trying to build up, and I tried to contribute in some ways to that. But the two things they were amazing at was hiring those top tier engineers and delivering digital products.
Okay, cool. Tell me a little bit about StartLabs, working with different founders in the last 10 years in Serbia and the region.
It was really early days. So I was doing some work with Voja Lalic as a mentor for StartLabs initially, and I thought he was really way ahead of the curve. He's I think 30 years in the U.S., most of that in Silicon Valley, had done and launched tons of digital products himself. Through his own business, he has a business called VICERT, which is focused on digital health. But he had launched tons of kind of businesses. They put something in the marketplace, it makes money for a while, falls off, they go to the next thing. So he had been, I think, entrepreneurially quite successful in that space, and then rolled into services. And he wanted to launch StartLabs based on the things he was learning, being in Silicon Valley, talking to people and looking at what's going on at Y Combinator and some of the other incubators and programs in the Valley. So, in the early days, and we're talking about, I don't know when they started, 12, 13, 14, somewhere in there. He really had a perspective that nobody else here had when you're looking at early stage investing. And it was really about, and it kind of comes back to what we talked about before, which is figuring out, looking for good founders, good technology, good products, good ideas, and then helping them bridge that gap. So and he was the first person to say, okay, I'm going to invest this amount, for a minority stake. And then if you make it to the second part of the program, we're going to send you to work in the Salesforce building in San Francisco. You spend 6 weeks there. And then we're going to give you a whole series of mentors you're going to be working with. It was really slick, very early. So there wasn't enough, I think, deal flow in those days. But we made a series of investments. Some of those are still alive, and some of them, there actually has been, a few exits, some money coming back. But went in very, very early. So I really admired Voya for, he's a very brave risk taker, and he's willing to be out in front of the curve, which is not an easy thing to do.
Amazing. When did you start with Katapult program, and how did that look like in the initial stages of that?
They had been reaching out to me when I was in HTEC, but I'm like, look, I can't. I didn't have time to breathe. We were doing acquisitions, we were expanding, growing, opening new offices, hiring people. I said, no, I can't. I couldn't do it justice. And then as I was coming out, at the end, after almost 3 years there, I said, okay, look, I've got a little bit of time. Let me try this. So I agreed to go in, and it's been amazing. I'm a big admirer of what the World Bank has tried to and has accomplished, tried to do and accomplished, particularly in Serbia. It's really, there should be, I believe, a statue to some of the people from the World Bank in Serbia for the stuff they've done in the ecosystem. Everybody else, there's been lots of little pockets of excellence here. StartLabs is one. StartIt, is another one. The Science and Technology Park, the work that Gotza did around the incubator of the technical faculties, and then running the whole science and technology park. So there's been pockets of excellence. World Bank, Katapult Innovation Fund, they've done an extremely good job at trying to kind of put some money, expertise, professionalism, and stitch that ecosystem together. And so I think they've provided a huge amount of value in this space, far more than I think they'll ever get recognition for. But somebody at some point should say, hey, the country owes a debt of gratitude to the people that went to bat to bring money, top mentors, capability. A lot came into Serbia from the efforts of a handful of people.
Yeah. Thank you, World Bank, for helping us. During the Katapult program, you were working with a lot of founders. What were you helping them on? What were you mentoring them on?
So again, World Bank has done an amazing job at building a roster of mentors.
Sure.
So you have people that are great at early stage, pre-seed, ideation phase, figure out your business model. They're angel investors or maybe had been VCs. Then you've got people that are that are more experienced on kind of go to market and then scaling. So I'm more about scaling. So I try to work with companies that have found product market fit, understand really well their competitive environment, trying to figure out how, and they've kind of proven the model, and now they're trying to move out of the Balkans and go internationally. And so I'm working more with here's how you scale, here's how you raise money, helping them craft their narrative, helping them build up their organizations. So have worked with some extremely interesting companies, and they're continuing each year to improve and get more mature. But you have, like when somebody's still trying to figure out ideation, what should we do, or what's our business model, I actually say, hey, you should go talk to this guy or this woman. There are people there. There's somebody who was a co-founder of Expedia.com, people that have significant experience in angel investing. There's some, for this part of the world, I would say the mentor roster is super impressive. You don't find people at that level, in these kinds of emerging markets.
Sure. If we can take like the best of both worlds, both like the Balkan culture and the US mentality, and combine it, what would that look like? And do you think that would actually help the region or help the founders in the region?
I do. The Silicon Valley, for better or for worse, is the epicenter of the startup scene and the kind of the global innovation ecosystem. It's heavily weighted to Silicon Valley, both in terms of numbers of startups, money raised, all of that. So a bridge to North America is important. It doesn't have to be San Francisco, but that's important. It's a big market, and it's an open market, right? China's also a big market, but it's a tough place to just as a foreigner go okay, I'm here, I got a product, meritocracy is going to take over, and we're going to. Not all markets are, have the same level of barriers. U.S. is it's a huge market, but it's also open, and I think it's one of the most meritocratic. So I think you need some of the positives we talked about that determination, the passion and energy of the people here. It comes across. You see, this part of the world, it's famous for its emotion, for its energy. When people are energized, great things can happen. That kind of, there's a mentality here about always trying to kind of get around the system, right? It's just, my wife would send me to the grocery store, and I'd come, with a list, and I would come back, and she's like, "Why would you buy this product? We're going to get food poisoning." I'm like, "It's on the shelf. I'm sure it's fine." And every so often, she would be right. Not that we've got food poison, but something would be bad or off. And in the US, you outsource a huge amount of your thinking to the system. In America, if it's on the shelf, it's good. Like, yes, there are recalls occasionally, but it's just, an anomaly statistically. Here, you got to think about, well, do I buy from this? Do I go to this restaurant? Here, you still have to think critically in this part of the world. And in North America, we tend to just let the system do that critical thinking for us. So that problem-solving mentality is quite valuable here. People are always, well, let me ask once more. Why is that? Well, what's the deal? I'm still not sold. What about this? And people try to deconstruct and understand at a much higher level than in Western markets, where it's there, it's on the shelf, it's whatever. The store is on the main street, must be good. So that kind of, it's a combination of not just being curious, but skeptical. That healthy skepticism is quite valuable. And then, combining that with the US with the ability to understand markets on the aggregate, understanding your channel to market, understanding customer pain, how to play to that, all of those kind of, it's kind of go-to-market and sales combined. If we could help founders from here add that to their repertoire, put that into their toolkit, then I think it would be extremely powerful. And then hopefully, then the money could flow. There's some money here, but it's still, this is a market that still needs more capital. People think that Americans are great entrepreneurs. Our failure rates in the US are the same as everybody else's. The numbers are very consistent. What America does better is we convince more people to try. And if you try and fail, that's not a mark against you. But there isn't something innate in American culture that we're amazing entrepreneurs. Just more people are trying, more people are going out there, and we have more of a salesy kind of commercial approach, which helps when things get off the ground.
You had the pleasure of working with a lot of different stakeholders, VCs, private equity, governments. What's the missing bridge between, for example, the public institutions and what they're doing generally in the region and the startup ecosystem that you think is detrimental and that needs to change?
So I mentioned before, lots of pockets of excellence in terms of the ecosystem, and it needs to be stitched together and become a bit more cohesive. And that will allow it to, it'll allow it to be viewed as a single entity as opposed to just, well, there's this over here and this over here. So today, I think people still need a bit of a roadmap. Where do I go for this? Where do I go for that? The ecosystem needs to be a bit more cohesive. World Bank has done a really good job in terms of acting as a gravitational point, what they've done with the Innovation Fund, with Catalytic, what they've done with Katapult. They've launched a number of different initiatives and brought some money along with it and capability. But I think, from the public institution perspective, there needs to be a bit more focus on innovation and a bit more money available to kind of grease the wheels to make things happen, right? Innovation Fund was a big deal. That was launched years ago, probably more than a decade ago. And when I first saw it, I thought this is going to be hilarious, right? The government is going to invest in startups. What you're going to have is people that are connected to ministers and government people just launching .com whatever, and that's not the case. I've been thoroughly impressed with, and even when I would go to like early days startup judging competitions, people that were winning are generally ones that had already gotten grants or something from the Innovation Fund. So there was a really high correlation between the quality startups and opportunities and the ones that were being selected. So I've been following what they've done for years, but I think now the World Bank's played its role, and it's now time for the government to kind of step in and help round out the ecosystem. It needs to have a Series A fund, for example. That's missing. You can go abroad and try and raise money for Series A, but it's not the same thing as if there's a fund here that's focused on this marketplace. There's a big difference between I've got a fund and I'm opportunistic in the Balkans versus I have a fund and we only invest in the Balkans. Because then you're going to go deep, you're going to meet founders, you're going to be working with them, you're going to be bringing capability. That's what this region needs, and that for me is really the next step. And for that to happen, I think that'll need some kind of support at a government level. I don't know whether that's a developmental financial institution like IFC or EBRD or the Serbian government, but somehow at that top level, right, at the top table, those parties need to figure out how do we continue to move the ecosystem forward. I think a big part of that is Series A fund.
Mm-hmm. Why do you think we need a Series A fund versus more help on the low level, which is for example, like accelerator phase, or helping the startups who have ideas actually accelerate those ideas, and they can raise, like once they have good traction and they've raised already like a seed, which is like $1 million or $2 million, they can find Series A investors abroad, right?
That's what people. That's the argument that I've had a bunch of times with people, and my answer to that is a couple of things. Number one, if you go overweight, and I'm not saying that Serbia is overweight, but if you went overweight on pre-seed and acceleration, what do? You accelerate everybody. Think of it. I look at
you accelerate everybody out of the country,
out of the country or into a wall, right? And then you can't, because there's some funds here still aren't ready to make the leap internationally. Right? I made a comment, we started here, I thought you would live in the US for quite a bit of time because you the way that you operate, the culture. Not a lot of people, I've been here 18 years, haven't met a lot of people where I feel like this guy really gets it from a North American perspective. I know a few, but not that many. And so a lot of these startups, they still come with, more of a Balkan perspective, more of a Balkan approach. It's hard for those guys to connect with a Series A fund in London. It's hard for me in London to talk to investors as an American. I just came at it from a very different perspective. There is a culture clash. So if you have a fund that's dedicated to this market, number one, they're going to know all the founders, and they're going to be working with them and bringing something to the table. If you have a great Series A fund in Berlin, they're not spending time here. They're not working with founders to mentor, to help, or to develop. They're just looking at deals and they're focused on Germany and France and Benelux. And if they go to Southeastern Europe, it's only if it's opportunistic and there's a home run. So think about how the ecosystem has evolved significantly with now you have Silicon Gardens, South Central Ventures, Fifth Quarter, America. You have a number of different funds. All those guys going to events, all those guys taking meetings with founders, all those guys, most of them doing some form of mentoring. That has moved the ecosystem forward significantly by having money, capability. It's not just access to capital. It's also those guys, most of those guys were founders in some sense. They're on their own, and they're mentoring, they're helping, they're talking there. I see them, when we do residency week for Katapult, those guys come as well, even though they're not full-time mentors. They come, they're looking at, they're providing feedback, they're looking at pitches. You're not going to get, there's no Series A fund from London that's coming to that event, right? Because those are for mentors for Katapult. So if you had a fund here dedicated to this region, you're going to get more capability. You're going to be building more capability, and you're also going to get a focus on the market. I've got 80, 100 million to invest in Western Balkans. I got to figure out, what are the 10 or 20 deals I'm going to do in this region. And you're going to get far more penetration and depth, and somebody who understands, that can translate. Okay, the guy said this, and maybe that was a bit of a turnoff, but because I understand the culture, actually, I know what he meant when he said this. So you don't have that kind of culture clash that you might get from somebody, say, in Silicon Valley or London or New York.
Do you believe there's enough deal flow for a Series A fund in the region?
Absolutely. And the reason is you have all of these different programs, acceleration and incubation going on, and they're, what they're doing is, you said, they're either accelerating them if they're really good enough and they can really make that leap out of the country, or just literally into a wall and saying, well, okay, you've gone. If you think of it like, I look at kind of startup investing in ecosystem like a trip on a train, and you go from station to station. The thing that I always tell the founders here, whatever you do, figure out what you need to do to get to the next station. But don't let the train leave without you. So I see somebody negotiating, and they're negotiating over some stupid term, or they're overwhelmingly focused on valuation. I'm like, if the train leaves, yes, you didn't sell at a cheap price, but you didn't sell. You didn't raise money. Train left, you're stuck at this station. And then you think, and there's not that many trains coming through. So if you focus on steps that give you momentum rather than the optimal deal at each stage, you're going to do far better, and the ecosystem will do better. And Series A is kind of the next logical station on that step here in the region.
What is your view on founders having an advisory board and having like high-level mentors from generally the world or from US, and what my partners in the US saw is that a lot of the startups don't understand how to put a board together, how to engage your mentors and advisors, and actually how to value them in terms of the equity that you're going to give. What are your thoughts on that?
Part of the problem is people want to do that early on. And
Okay.
the guy that you can get when you're at pre-seed versus the guy that you can get when you're at Series A is entirely different. And I saw this at HTEC. They were very careful about who they put on their board, who they brought in, because they knew, look, we're doubling this business every year. We're growing at a really good clip. This guy who would be really nice to have on board now isn't going to be that relevant in 3 years because we're going to be a much bigger business. So they took a very, very forward look. And I remember when they were going to put together, like, look, shoot for the stars. Let's think about who the rock stars are that we would want. It's not about decision makers. It's about getting people that can help us, that can help us unlock some serious problem or make introductions or help us get a big client. And I think with the startups here, the focus is, oh, we're going to get this guy because he's a big player. He's a FATSA in this market, so we want to get this guy. But in 2 or 3 years, if this thing takes off, actually, he's a big guy in this space over here, but not in the big game. So my advice is, don't lock yourself in on a board until you're at Series A, and then your fund investor is helping you do that and helping bring in serious introductions. Because the guy that you can talk to today about that is probably not going to be that helpful. And in after 2 rounds of investment, you'll have outgrown it. So I think be cautious. It's always good to have mentors. It's always good to have people that will advise you. But proper board seats, advisory board, board of directors, those should be reserved for when you've got serious traction, real investors, and you're going to launch in new markets.
Mm-hmm. Okay. For founders listening today who want to raise from like international investors, they want to do pre-seed, seed, or Series A, what is one thing they need to fix before even asking for money?
A big thing is the narrative.
Mm-hmm.
So I see a lot of times, there's a couple of things. One is, do you really understand your customer's pain? I see a lot of nice to have. So the question that gets asked very often at Katapult is this a painkiller? Is it a vitamin? And then I go, well, maybe, or even could it be an antibiotic? Is it actually going to kill, not just mask the pain, but kill the problem? And so startups are like, this would be a cool thing to have, but they haven't done enough work on understanding the pain to determine, is it just a nice to have, or are you really solving a serious problem that people will get on board for? That's the first thing. And then once you've established and you've really gone deep on the pain, then you come to the next stage of building the narrative. And a lot of the narratives I see from the pitch side is, the market's broken, we're amazing, we're super cool, we have these founders who are super experienced. So they kind of follow the standard narrative, but it's not compelling because it's a bit too superficial. And I'm always, when I'm helping the companies that I'm mentoring, which are generally more on the scale-up side, to be fair, I'm always saying, look, first convince your audience that somebody's going to make a lot of money in this space. Don't explain why it's you. Just explain, by the time you exit that first part of your presentation, and that can be 3-5 slides, your audience, you need to convince 80% of the people in the room, someone's going to make a lot of money in this space. Then you need to go back and then say, here's why it's us, and here's why we're in a position. But don't move on to you until you've convinced somebody there's a big old problem and somebody's going to make a killing on it. And what generally happens is they infuse all these different things. There's a problem, we're amazing, the market's broken, and it just kind of goes back and forth, and the narrative gets diluted. If you convince the people in the room, I've really understood the problem, and there's going to be real money to be made, here's why we're the ones to do it, and then at the end, here's what we're asking for, and here's what we're offering, and here's what we're going to do to execute. If you can kind of put it in those 3 stages, it's just much more digestible for at least for a kind of linear thinking investors. There's other guys, investors are just like, I love this team, I love the energy, That's a different game. But for kind of the more linear group out there, you need to break it down into really digestible bites and convince them you've identified a serious problem with limited competition, big market, and huge amount of pain. People are screaming, and here's why you're in a position to go after it. Here's how much I want, and here's what I'm offering. Or here's what I need.
That's a very good thing. Typically, when I look at pitch decks of founders here, I always give them one advice. Your first slide shouldn't be, this is the problem, because when you start explaining the problem, they don't really understand what's the situation behind the problem. So I tell them slide number 1 is situation. Explain the situation. What is the situation? Explain that situation in a context of larger market forces. That can be slide number 2, or it can be incorporated in the first slide, and then talk about the problem and how you are solving it, right? And that is one of the biggest things that investors want to hear, actually, instead of, oh, this is a problem and this is how we solve it. Because in a lot of ways, investors are generalists. So even when you try to explain the problem, a lot of them won't even get it.
Yeah, you go to the Valley and you've got guys that, were physicists and then working, in this space, and they're super broad, and you find those guys in San Francisco and New York. But, in emerging markets, you get more generalists, people, and a lot of guys that they built some SaaS and made some serious money, or they created a product that went wild and they exited, had 2 or 3 exits and got into VC. So you have people that are more generalist. That the comment somebody made to me once, I can't take credit for this, but if when you're talking to kind of generalist investors, it's like, the parent bird feeding the baby bird. You got to chew the food up and stick it in their mouth for them. And they appreciate it. They're like, hey, you made this really easy for me to digest and understand. Not like they're offended by the fact that you've broken it down into simple terms. The startups I work with, I say, if you can't explain this to your grandmother in super simple terms, here's what we're doing. This is why it's compelling. You can't, over at a Slava, explain to your grandmother exactly why this is compelling and why you can do it, then you're not able to talk to an investor. Because somebody at some point is going to come at it from a different perspective. They're not going to be able to get it, and you're going to miss an opportunity. And you need to be able to simplify it. You don't have to dumb it down, but just distill it down to the point that you've shown you've mastered the issue, and you can explain it in very clear, uncertain terms, and then why you're able to address it.
Yep. One final question before we go to the quick and short questions. I want to ask you on your perspective on the AI bubble and the stuff that's happening right now in the world. You've gone through the dot-com bubble, so a lot of experts compare the dot-com bubble with the AI bubble at the moment. What's your take on that?
So look, I saw what happened with the telecom boom and bust, and then I saw what happened with .com, and I lived through that. And my career was very much in that space. So I saw what was happening with valuations, with capacity. I was doing acquisitions back then. I saw what happened in 2008 with the financial crisis, and the bubble that was created there was subprime. So I've seen, I'm born 1970, seen a few things in my days. For sure, when something gets red hot, like AI is right now, valuations go nuts, and irrational deals get done. So it's going to be a huge growth market, but there's going to be some really bad deals done. That's going to happen, and that's okay. But if you kind of look at what's going on in the marketplace, whether it's different ratios, price to earnings of the market over time, or Buffett has a thing he does around where he's looking at the market cap of top 2,000 or 5,000 stocks versus GDP, trying to see relative value. Even in 2008, where there was a huge crash, if you look at that today, it kind of goes up, there's a big drop, and then it goes again, way up. So if looked at over time, it's a blip. So there's going to be some pain taken because AI there's just too much money flowing in and not enough coming back out. But at the same time, there's going to be a massive value creation exercise. I saw what happened with, if you go way back, first it was computers started creating a huge amount of efficiency, and companies like Hewlett Packard and IBM and Dell went nuts. And then ERP appeared, and ERP kind of coincided with the telecoms boom. We start interconnecting these computers and sharing data, and then you put these huge applications in place. Okay, there's a lot of value to be had, mostly cost savings and efficiency, but that also created a huge amount of value. And then the problem was that all the big companies basically were cramming their processes into the processes that were given to them by Oracle or SAP or PeopleSoft. So everybody got the same. There was no competitive advantage. Everybody got the same thing. You just either made the investment or you didn't. If you invested, you got the benefit, but you couldn't build on that because you got the same processes as everybody else. SaaS kind of started to change that, where hey, we're going to go. You don't have to be a huge company to play, and there's a bit more flexibility. Now I think SaaS is going to take a huge hit because AI should be able to come in and let you keep all your processes, right? You define the optimal way for you to do business and for you to operate, and AI is going to help you build your own digital strategy for your core processes. And I think that the wave of the future is AI coming in and saying, hey, once you figured out and if you could, there's a technology aspect in terms of data engineering, data science, but there's also a business analysis exercise of, do you understand your processes and what's optimal? If you can get those two things right, that's going to create the organizations of the future. That's going to be an enormous value creation exercise, enormous. So when you look at that, I think there's going to be massive gains from AI, and it's going to create another huge curve of growth, even bigger than what we've seen, in the last wave since .com, which has been unprecedented. That's coming, but there's going to be winners and losers, and there's going to be some people that really take it on the chin. Just like Netscape was the biggest browser that failed. You had the early search companies, Lycos and those guys. They were darlings on the cover of Fortune magazine, and then fell off, and Google ate them all. So there's going to be winners and losers, but the overall value creation is going to be phenomenal.
What is one hiring mistake you see a lot of founders in the region make?
Yeah, hiring mistakes. So one of the things I see here is you've got an entrepreneur, he's developed a product. There's a big problem I've just kind of uncovered recently. There's been so much success of people that saw an opportunity, developed a product or service, they've never really worked anywhere, and they've grown quickly because there's demand for their product. Digitalization drove an amazing amount of growth. And as a consequence, they've never worked anywhere, or they have very, very limited experience working in real companies, having serious managers, being tested, pushed. I learned an enormous amount. My time in Prague for 7 years, working for a US-based telecoms company, you had all these seasoned international telecoms executives. Those guys were hardcore. They were all like, some of them had ex-military background. They did not mess around. You got your rear end kicked if you messed something up. The expectations were clearly set. Some of those guys were really, really good managers. Some were bad as well, and some other guys were jerks. But I got a really good cross-section before I launched my career further and got entrepreneurial. I understood how these things, how to set expectations with people, how to call them, how to hold them to it, how to call them on their mistakes. And the problem here is that you have lots of entrepreneurs that have been super successful, never worked anywhere. So they're learning on the job, number one. Number two, they're reading high-tech blogs and blogs of these famous entrepreneurs in the US. Oh, this guy does this, I'm going to do that. This guy says this, I'm going to do that. Not all that stuff translates. So what I see is that lots of founders here are trying to find somebody who they think is going to make them look good, in the sense that if I can hire that guy, I must be serious. But then they have no idea what to do with that guy. So we hire this executive who's been successful. I bring him in. I don't know how to set his expectations. Don't know how to manage him. Don't know how to call him out when things aren't working out. And I've seen this, time and time again. Super seasoned executives that have been very successful go into very entrepreneurial organizations, and the view is always like, oh well, he's non-entrepreneurial, didn't work out. Well, actually, okay, maybe that's part of it. There's another part, which is you weren't seasoned enough to use that kind of skill set. And I'll give you a good analogy. I years ago, I don't know, 8-9 years ago, I moved to Avila, and I've got all these neighbors out there, and I had a bunch of my study coming to do work. And there was, one day we come and okay, and there's one guy that's kind of running everything. It's like, okay, Misha, you take the mixer, you get the saw, you get this. And they were like, David, idi tipo gorivo. And I was like, what gorivo? Like, donesi rakiju, bring us the rakia. And I realized not everybody gets to use power tools. And I'm not getting the saw, I'm not getting the jackhammer, I'm going to bring the rakia and serve, because everybody does. I don't have the experiences in my stuff. Not everybody knows how to work with power tools. And just because somebody's built a super successful product doesn't mean they're ready to basically go hire a seasoned management team and manage those people. And I've seen time and time again examples where actually they hired somebody like, this guy's, he's a known quantity in this space. If I can hire him, I'm going to, everyone's going to look at me like, wow, you must be great. And he'll just figure it out. Generally, it doesn't work out that way. Sometimes it does, but generally not.
What would be your advice for first-time founders who don't have a network, don't have any real experience, and don't have any warm introductions into the industry? Would you tell them to be an entrepreneur, or would you tell them to go work at some company, learn managerial skills, and get some real-world experience?
I think before you start something, it's always good to have some context, both in terms of how to manage people and build a business, but also if you're solving a very specific problem, you should have worked in that industry. So for example, people that open up restaurants and never worked in a restaurant, I always go, what are you doing? It looks cool on TV, but it's actually hell. It's exhausting. You really have to have a huge amount of energy and passion if you want to be in hospitality and own a bar or restaurants. It's very hard work, and it wears you down. So you should, if you want to open up a bar, you should have spent several years bartending, working in a bar, working in a restaurant, a cook, whatever, something. Same thing with entrepreneurs. I think if you're solving a very specific problem, we're doing this in healthcare. Bam, we've discovered this opportunity with this in healthcare. Well, you should have worked on solving that problem in healthcare before somewhere else. So that generally you need to have that. But also I think even if you have that stuff, one of the big issues here is I see lots of startup founders, oh, we're going to do this, this, and this. One of the things they don't do is they don't go out and talk to everybody. Like, the more people you talk to, build your network, and here's what I'm trying to do, what do you think? Understand, validate. You simply, and one thing I see very often they don't do, sit down and say why you think this is a good opportunity. State all of your assumptions. What are all the assumptions you've made that tell you this is going to be a good business, right? Market growth, competition. There's a series of things. People very rarely state their assumptions and then test them. And when you really drill down to the point that you've actually outlined what all your assumptions are that tell you this is going to be a good business, and you've shown some validation of, well, we tested this, whether it's interviews, talking to people, doing stuff in the marketplace, that is a hugely valuable. And generally that stage gets skipped, and it's like, no, we don't have time for that. We need to go straight to the launch.
Yeah, this is the exact same thing that one of our mentors, Chuck, said. He's like, you need to have a workshop that's only focused on assumptions and what are the key assumptions that they think are correct, and we are going to figure out why they're not correct. And that can be a live workshop where we're going to go through those things and basically help the startup understand if they should be building this business or not. We actually had one interesting startup in our cohort where after the cohort, after like really 5 days working straight with our US experts, they were like, yeah, we are not sure this is a really good startup idea. We're gonna do these tests for the next couple of months, and we're gonna see if we're going to stop doing this or if there's actually a potential here or not. And then for them, it was like transformational in a way. So
I mentored a really successful startup in the last cohort for Katapult. They got investment from Fifth Quarter Ventures.
which one?
Cosmic Buildings. And I was in a meeting with the team, and then the founder of the investor, Tico Bajic, he was obsessing over assumptions. And I was sitting there listening in one of the meetings with the team, and I was shocked. I'm like, this guy really gets it, and he's bringing an entirely, I never saw somebody with that mentality here. He's bringing that kind of North American startup mentality here, and he was just grilling them, understanding, making them state their assumptions, trying to get them to defend. It was a tough conversation, and I was like ferociously writing. I'm like, man, I'm learning a lot of this, because I'm not a startup like guy. Once we know we have a business, I can help build it, but I don't think I'm the guy necessarily that's going to uncover the thing and then launch it. Just that's not my strength. So I was listening to him, and it's the first person I've seen from this region take that approach, and he was unwavering in his demands of what he wanted the people in that room to understand and defend. So I was quite impressed.
We're hoping to bring him on the podcast in a couple of months. So thanks for the suggestion. Final question: what is the book that you most recommend to founders, and why?
So it's a tough one because I'm a bit more old school. I come from a different generation where we were reading, it was more about kind of how you build organizations and enterprises. And I think the game has changed. But the thing that's one of the books that have stuck with me for a very long time is Good to Great. And trying to understand how good is the enemy of great. Whatever business you're in and whatever success, any business that's been successful, a core part of that was understanding who really gets it in your organization and who doesn't, and not allowing somebody to hold you back because they're performing, but they're never going to get to that. You're driving for this. You've got to have the right people on board. And the difference between businesses that are decent and businesses that are amazing for me has always been those managers that understand the importance of getting the right team and that have the courage to say, not good enough, we're going to make a change here. It's the hardest part of the job, but the people that do that, in my experience, going back decades, are generally the ones that are most successful. And Good to Great kind of talks about that process, how you go through it, how you evaluate, and showing people that sometimes getting somebody who's just good is actually a way to hold your organization back.
Cool. David, thank you so much for coming on the podcast. This has been a really, really interesting conversation. Guys, for any of you who are founders, operators, or investors, stay tuned for more episodes like this, where we talk with amazing people like David.
If you're a startup founder from the Balkans, you'll eventually need a US company. To sell into the US market, use Stripe, or raise VC money. But here's the problem. US lawyers charge between $600 and $1,000 an hour. Opening a bank account as a non-resident is a nightmare. You need a US phone number, operating address, and there are a lot of hidden costs plus lawyer lingo you can't understand. This is why we have partnered with Neobase. They are a team of Balkan founders who have been exactly where you are. They're 10 times cheaper than US lawyers, and they handle everything end to end, from the corporation, bank account setup, tax filings, and basically leaving you to focus on your own business. Head to neobase.co, book a free consultation, and mention Scale SE to get 10% discount off your LLC or C Corp setup.